Hi, and welcome to this webinar where we today have the pleasure to present Mdundo. The subject for today is touching the base on how Mdundo is trying to create a business model that's also in line with creating a sustainable world, as also presented many times, as many also know about the 17 goals on the UN Sustainable Goals. But also to as an investor, why is this important? It's important because we see more and more investors, taking their money and going against companies who are really have a good strategy for fitting into such a world. And maybe also very often we see companies just saying we're good at everything, we are supporting everything, but in the case you shouldn't do that. You are a company where you can really do a difference on specific targets or specific goals, specific ways to drive the world, and we will look into where Mdundo is targeting their efforts to try and create this sustainable world. A little bit housekeeping: you can ask questions during the webinar presentation on your right side. I will pick it up. If it fits in, I will ask it immediately. If not, no worry, I will collect it and ask it in the end. But I think, Martin, you can take over from here.
Thank you very much, Michael. Thank you, everyone, for joining in this afternoon session and getting a better understanding of how Mdundo deals with ESG. With me today is also our chairman, Jesper, here on the call, who will jump in a little bit later in the presentation, and also be here to answer any questions that are being asked in the end. I want to just start by jumping into a brief recap of our business. So Mdundo is an African music service available through a mobile web and an Android app. We're looking here at numbers from September 2020, where we had 27 million downloads per month of music from our platform, 6.4 million monthly active users on the service, and actively focusing on 15 African countries. Our music service is free, primarily by advertisement funded, so free of charge for the user to use, funded by through advertisement. We have a massive selection of African catalog, but also a significantly big selection of international catalog on our service, with a total of 1.6 million songs on the platform. Our strategy right now is to grow from our sort of homegrown markets, being East Africa, and rapidly scaling the company across Africa into a number of strategic commercial focus countries, where we by 2022 expect to have 5 commercial focus countries and a total of active focus countries. We are on track as a music service to grow from the 6.4 million monthly active users that I mentioned before to 18 million users by June 2022. And as Michael introduced in the beginning, the topic today is the ESGs and how we as a company ensures that we are in line with these and create a better future for all. There is a number of ESGs that Mdundo specifically fits very well into, but our primarily effort and focus has been within the social aspect and the corporate governance aspect, where we see that, well, for example, we do generate income opportunities for more than 90,000 people who are musicians, who are gaining royalties and generating revenue and income through our platform, many of which are not able to sustain or get paid for their craft elsewhere, despite the popularity of the music and the popularity of them as an artist across the continent. Also, to highlight a few other things, we have around 50% of our employees that are women, really supporting the gender equality across Africa as well. And I think as a core sort of philosophy in our business, we are very focused, working towards legalizing music consumption in Africa, as we do work in a market that's historically been very heavily pirated of music, and we are very actively growing a formal framework around the music industry and driving that agenda. One of the ways we are doing that is through a partnership that I will jump into a little bit more in a bit, but where basically we remove illegal catalog and illegal songs, links with illegal songs from Google search, to make sure that pirated sites piracy through Google search is being stopped, and thereby protecting many of the musicians' work that we're working with at Mdundo. I want to dig in particularly to a few cases and give you a snapshot of how this works in real life. So I think many of Mdundo's business decisions, being a company that has a really strong focus on Africa, actually makes a lot of ESG sense. And so I just wanted to explain to you a few initiatives, but I think there's a number of different things that we as a business, just by working towards our overall vision and goals, actually end up having a very big social impact as a business within our business and to our stakeholders across in the market. So I pinpointed a few examples here. The first one is that together with a UK-based company called Audiolog, over the last year we have removed 2 million illegal pages with illegal African catalog from Google search. That's obviously a lot of sites that were making money from this catalog, but without the right owners benefiting from it, and without the musicians benefiting from it. The graph here is from the Google Transparency Report, which is available online, and you can actually go in and look our organization up, and Google will show how many sites we are closing down, and how we are basically contributing to that community that basically is put into the world to make sure that we as private stakeholders can have an impact on our own industry and ensure that the rightful owners earn from their craft and from their music. We also have a very strong female presence in our company, with about 50% of the team being female, and 2 out of 5 of our head of departments being female. I've highlighted 2 of them here. Absolutely amazing colleagues that are working alongside us. We have basically enforcing gender equality is obviously bringing different viewpoints to the ideas to the table, different ideas, market insights, and all along adding a lot of value to the company as much as it's driving the global agenda. The 2 people I've highlighted here is Mdundo, who is our head of music, who's been working with me since 2013, 2014, one of the very first people on the team, working as head of music, and basically helped us build this company through the many years that we've been around, and an absolute star within the company. And then we have Rachel Carano here as well. She's just joined the company last month, so she doesn't even have an official picture yet, so I couldn't put her in here. But she does exist, and is working in head of ad sales, and basically running that department, driving our brand partnerships and our advertisement sales department. Last but not least, I've highlighted here a story published by the UN last year during Corona, where our platform was also highlighted in the story. If you have a read through the whole, it's available on our Mdundo for Investors website. And basically, this is to me a really great example of how we generate impact for the artists, because obviously as Corona hit the world, artists didn't have an opportunity to go out and perform, and there was a massive decline in the live music income for many artists. in Africa, that's where artists make most of their income, and therefore our importance for the music community increased significantly in that period, providing them a second opportunity or another opportunity of generating revenue through our platform and through their art. We did a great interview with this in association with this UN report, where a few artists as well highlighted how that had really helped them through this period. And so we are obviously it makes me very, very proud when just by working towards our own sort of vision and our own dream about building this company actually have this impact on the stakeholders that are around us.
Perfect. And Martin, I might have some questions. Or Jesper, you want to join in here?
Yeah, just wanted to add a few comments. Thanks, Martin. It's very, very insightful. The theme was named the ESG for this presentation today. But just want to mention as well that when we look at the 17 SDGs, there are different ways to fulfill them and impact them in a positive way. And when we're talking about ESG, it's a lot about screening out negative effects. But the way we work in Mdundo is, of course, we're screening out negative effects, but we actually put much more effort into creating a positive impact, creating jobs from our services. One of the things I'm most proud of is that we created 90,000 jobs in the creative industry, which is a massive impact you don't see from many businesses, and definitely not businesses listed on NASDAQ. So when we say we are actually one of the most impactful and sustainable businesses listed on NASDAQ, it's true, because we're going a step further than just looking at traditional ESG screening, which will be in the future, both for the whole industry, the stock markets, and for Mdundo.
And I have a question. First, regarding you are working in Africa. Let's put it bluntly on the way. You hear about how you sometimes need to work in Africa. Corruption is a part, deals being signed, and such stuff. And so, how do you handle that? I know it's a lot of companies has a hard time doing that. But can you elaborate a little bit on it? Because I think as an investor, it is a risk, I guess, you associate with Africa. So maybe it could be nice to get that totally out of the way.
Yeah, well, I think first of all, what's really important is to have a zero tolerance policy on the area. We've had that since we started. And that with that being a part of your internal culture, to have a zero tolerance on that, that first of all sets the bar really high and sets the standard where it should be and where it also is in the rest of the world. That being said, I think we also held a little bit along with the fact that we don't deal with physical goods, because as you rightfully mentioned, Africa does have a reputation for corruption, and we feel that particularly what we are experiencing is that particularly where you're moving physical goods around from one place to another, that's where it becomes a challenge and an issue. And by being an online company, we're not depending as much on those physical moving of products around. And so I think that means that we are not facing as much or facing it in the same way that some physical goods companies might be. And so that's how we deal with that.
Yeah, zero tolerance, perfect. And also maybe just a reminder on how much music is actually legal right now in Africa, percentage-wise. I know you can't give me an exact number, but just to give me a sense of it, that it's really making an impact if you can continue this one.
Yeah, so it's obviously a trend that's really rapidly moving, so it changes quite quickly at the moment. But our last assessment, we had 92% of all the music consumed, 92 is being illegally consumed. So us together with all other legal and well-established music services account for only 8% of the legal consumption. Luckily, it is a trend that we're seeing moving in the right direction, and also something that we are heavily involved in pushing in that direction.
Perfect. Yeah. And Looking outside from an investor, it is, clearly that you are moving, you're moving the needle just by your business model. So that is kind of nice to see both on this one and especially on the income side. I don't know, do you have any problems being it? You, as you said, half of your team is female, and you are not, and you're doing operations in Africa. Is there a cultural barrier by having the females, or are a lot of the countries actually going a little bit westernized like the rest of the world? Maybe the Me Too is disagreeing, but is it a problem for you having this agreement, or is it in the countries you are pretty cultural normal to have women working for you?
Yeah, it's not at all a problem for us. I think when you look at the African continent, you need to look also across different segments, and gender equality is very skewed in different segments within the continent as well. And if you look at the backgrounds and the knowledge and the skills within our own talent base and our own team, then there's no problem both in terms of attracting very good female talent, but they also don't have any problems in terms of getting around and getting their business done. Actually, the two people who I have here is probably, well, I think our whole team deals a lot with external stakeholders, but they do have a lot of dealings with external stakeholders, and it has not been a problem for driving results. If anything, actually, my own opinion is that it adds a lot of value to the team, because it makes us understand the full market, and gives us a lot more insight to the market as a whole, to have that balance within our team.
Perfect. I can see we have a question not regarding ESG, and I don't know whether we should take it in the end, So I would say, this is your business model is clearly just by being a business model supporting the stuff. But I think you also we can elaborate a little bit here in the end on what do you get out as an investors. But clearly the business model in its own are doing it. So maybe we should finalize the investor side on what you get out of it also by doing this business model, and then we can take the question in the end.
Yeah, thanks. Yeah, so I think just to I had a few more slides here, but just to sort of look moving forward, and also just to summarize and recap on our business. So moving forward, our focus is heavily on user growth still, and so we are moving towards 18 million in June 2022. Just as a recap of our financial estimates as well, we are currently very aggressively investing into our business and to our rapid scale across the continent, and so that is showing at the bottom line for the next couple of years. But also the growth that you're seeing on the user side is also reflecting on the top line of our finances for the next couple of years.
And actually, to get in here, if we look at is it user numbers or is it active downloads who is driving the income to the musicians? Is it a couple of both, or?
Well, it's both. So if you're asking about what's driving for the individual musician, then it's downloads, because the more music is being consumed by one artist, the better. But of course, the two metrics correlate very strongly together.
Perfect.
And then I want to hand over to Jesper to take us through a bit of a high-level perspective of the peer evaluation of the business.
Cool. Yeah, thanks, Martin. So apart from creating a massive impact on the continent, I mean, we are a highly for-profit business that want to make a fantastic business model to create shareholder value, but also because we believe that the best way to create a massive impact is to create a sustainable business model, financial sustainable business model. But from an investor perspective, it's of course also very important to see what could be at the end of the funnel. What could a transaction value be if someone one day wanted to acquire Mdundo? And for that, we've done a peer analysis. We did that when we went IPO in September. And we can see from the slide here is that the peers that we found for the music industry is trading between 10 to 115 US dollars per monthly active user. At the top, you have Spotify, you have Tidal, services that we know from the western part of the world. At the low end of the peer valuation, we have, for instance, a company named JioSavan. JioSavan is an Indian company. Savan was acquired 2 years ago by a telco. They had 100 million users, was acquired at $1 billion, meaning a peer valuation of 10 US dollars. So if we look at how is Mdundo valued today compared to Jio, for instance, well, with a share price around 7.3, it actually takes us down to a current valuation per active user of 1.88 US dollars. That being said, if we actually calculate it on enterprise value, because the company today has around 34 million krona in cash, then it actually takes the value per active user down to $1 US. Also meaning that there's a gap just there of 10x up to a valuation like JioSavan. If we look at the expected value per user, or the expected number of users in 2022, which is 18 million users, then we're trading at a value per expected user of 55 cents. That's an 18x gap up to JioSavan. Then, of course, it's a very relevant question to ask yourself, is JioSavan actually a fair benchmark? Martin, could you move it to the next slide? Which we actually do believe it is, because there's no doubt a value of an African user is not the same as a value of a Spotify user from mainly US, Europe. But Savan is a music service in India that was based purely on a freemium model, basically like Mdundo is as well. It had 100 million active users. We don't have that yet, but we're going in that direction. As I said, it's traded at $10 per monthly active users. And on a macro level, a lot of people say, yeah, but that's India, it's not sub-Saharan Africa. But the difference is actually not that big. In India, you have an average GDP per capita of around $2,100. It has a population of 1.3 billion. If you look at sub-Saharan Africa, you have a GDP per capita of $1,600, population of 1.1 billion. But the growth rates in sub-Saharan Africa, population-wise, is much higher. And if we look at the countries where we have a commercial focus, it's actually matching the GDP level in India. So we are of the belief that it's actually a fair peer, but it's always up to the investor themselves to make that decision. Then a lot of people say as well, but are there any transactions in the tech industry across Africa? Yeah, there actually is. The last couple of years, there's been quite a few. Here, just a few examples. The best known and most valuable is Jumia. That's like Amazon for Africa. It says here it has trading at a market cap of $3 billion US. Actually, today it's 3.5. It's increasing. It has increased 10x over the last 10 months. 10 months. We had another acquisition. We had a Network International Holding. They acquired DPO Group for almost $300 US. Paystack has recently been acquired by Stripe, payment service, for $200 million, etc. So the last couple of years, we've actually seen quite a lot of transactions. So we do believe there's an upside, and we do believe we're operating in a good market where we have a good position. And when we're looking at both developing the service and also peer evaluations, we're looking much more towards Asia to get the learnings that we're looking towards the Western world. Because they have the same mindset, they've had the same challenges as Africa is having, and we believe that a lot of the challenges can be solved in a similar way. For instance, creating a sustainable business model based on a freemium model. That would never happen in the Western part of the world, in Europe. In Europe, freemium model is a feeder for Spotify's premium model. Whereas in Asia, it's a business model by itself, as it is in Africa as well. I think let's move into the Q&A session.
Yeah, Q&A session, yes. how is the proportion in terms of revenue between the market acquisition countries and the commercial countries where you're already gone? You're still you are early in the revenue side, so I guess Martin, if you can elaborate a little bit on that, which countries you are getting the current and the expected revenue the coming years from.
Of course. So when we are expanding the service, we basically have three different sort of stages that we are moving into a country with. The first one is a heavily catalog focused, where we are focusing on acquiring as much catalog from a particular market as possible. So let's say, for example, a market like Zambia, our focus is very much on acquiring catalog and making sure that we have a very good catalog offering for the users in that country. Second stage is then the marketing stage, where we are very much promoting this catalog and using this catalog to grow our user base in a particular market. And the third, the commercial stage, which is where we have currently focusing on 5 countries, which is the green areas that are referred to here. And so majority of our revenue comes from these green areas, because that's where we have a commercial focus.
Perfect. Yeah, but I think we have gone through a lot of the questions on the ESG side and trying to show that a business model actually in itself can create you use the word impact, which is the next level of ESG investing, the impact investing. And I think it should be pretty clear your business model is actually moving towards more impact than just ESG, not doing harm, but actually doing a difference, which is new field also in investing, really picking up and giving strong returns in 2020 if you look at portfolios. So I hope we have given the investors some viewpoint into how this business model is actually an impact business model. So I would say thanks to the viewers and thanks to Martin and Jesper for helping me present this topic.
Thank you.
Thank you very much, Michael, and thank you so much for everyone who listened in.